Here we are, folks. The end of another quarter. Q3, and it's been a doozy. The dog days of August, the rally in September, coming to the end of the month. What are the big boys going to do under the changing, let's call it, investing landscape? China, still ripping. Autos, not. What kind of rotation will we see now and in Q4? 8:35, Tim Quast, the Quastinator. He's going to join us with the stats, what the money's doing. It's Monday. It's a big week here on PreMarket Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. Starting out in the red here, down 15 handles at 76 and a quarter. We're a ways away from that weekly low, so we'll see when we get to that level. The buck under par here. That's down 13 cents at 99.88. TLT just really can't get away from that $98 level, down 30 cents, 98.27. Crude down 28 cents at 67.90, retracing that big rally that it had. Gold, that's in the red by 480, still up near all-time highs, 26.63.30. Silver, getting allergic to that 32 handle, down at 24 cents, 31.58. Bitcoin futures, well, they're down still a little over $2,000. It's 64,115. On this Monday, I'm going to bring in an energized Triple D and an energized AB. How are you gentlemen doing? How was your weekend?
Busy. Boating, demolition derbies, fairs. We did everything. Me and the two kids were just bouncing around doing everything this weekend. And my wife and we were obviously doing a lot of boating too, because this weather was unbelievable this weekend. It was almost 80 degrees up here in Georgian Bay, which is not typical for this time of year. So we really went to the beaches, did all kinds of stuff. It was basically felt like it was like the end of boating season, though.
I feel like this is the fifth time you said this was your last.
I keep saying it, but I keep getting these good weekends. I mean, global warming working in my favor here to a certain extent up here in Georgian Bay, but this has been unbelievable, the season. Like, I don't remember it being this warm one day away from October in a long time.
I know it's interesting here in Detroit. I mean, I know we're pretty close geographically, but like right now it's getting to the point of the year where it's darker in the morning, so it's like dark when I wake up, and I expect it every morning to be like cold, and I walk outside and it's still not cold yet. It's still like 65 degrees in the morning, and I'm like, why did I put my jacket on expecting it to be, fall weather here, 50 degrees, and yet it's still warm. My weekend was good, was just out and about downtown Detroit. The low light of my weekend, I can't give my highlight because it wouldn't be appropriate to share on the show, but my low light of the weekend was...
I want to hear that. Stay on after the show.
Okay. My low light of the weekend was I was driving on Friday afternoon to go meet up with some friends, and I was driving through Greektown in downtown Detroit to get on the highway. I was like thirsty. I wanted to grab a Gatorade or a water bottle or something. And there's this little corner store, like a liquor store in Greektown. Pulled over on the side of the road, put my hazards on, went into the store for 30 seconds to buy my orange Gatorade. And this guy was giving me a parking ticket as I was coming out. And I was like, are you kidding me? I was literally in there for 30 seconds. And he was like, I don't care. You can't park in the middle of the street. Meanwhile, the whole...
He's blocking traffic. People are
no, I was not. And meanwhile, there's like 10 cars parked on that side of the road, and my car was just in the very front and had my hazards on. Again, I could not have been in that store for longer than 90 seconds, and this guy was giving me a $45 parking ticket and just did not care that I was already back in my car driving away by the time he could finish writing a ticket.
Wow.
Neither here nor there. Probably still my fault at the end of the day, but was still frustrating.
All right, the only thing you'll hear about sports is my buddy Ira came in. This is probably the 40th year he's come in for a Michigan game, and it rained the entire game.
Did
did
it?
not have, yeah,
Oh, we
it
didn't even
did.
get any rain
We
up
did
here.
not have I had the rain pants on, the rain gear, the rain hat. I mean, we didn't play well, but we won. But we got too much to do here to talk about sports, parking tickets, boating, and cow manure. So let's get
I
us
didn't even
going.
talk about the common era.
Oh, you didn't talk
All
about
right.
the cow manure?
All right, that's all right.
Well, we are in Detroit, and let's start in the world of autos,
Yep.
and a warning here from Stellantis. So Stellantis came in at 1:30, or this came in overnight because Stellantis I know it's a European company. I don't know which country over there, but one of the European
Yes.
countries.
Yes.
Came in and lowered its free cash flow guidance, updated its financials, and basically, said things aren't going as well as we had hoped. So warning of cash burn. Basically, just not good news from Stellantis. Stellantis itself is getting crushed down more than $2, $2.10, 13%. But also, impacting here a lot of other stocks in the auto industry. Whether you look at Ford, GM, you can go into the auto parts sector too, and that's hitting a lot of those stocks as well. But let's start with just looking at Stellantis' stock, and Joel, you can give us some technicals here.
I'll let Dennis show the fundamentals on here a little bit first
I
before I
think it's
comment.
just I've been concerned about the big three. If you've been listening to this show, I've been concerned about the big three. I think it's, a combination of higher ticket stuff. It's not selling as well as it was, but I think there's, competition obviously coming here. We know longer term why I'm concerned about them, but we don't need to get into a Tesla talk here. This is, these, I think I've been saying, I believe they're value traps. It's more value traps. Stellantis, 11.9% dividend. They are now in a cash burn situation. That means they are actually cash flow negative, meaning I don't know how they're planning on covering that dividend, and maybe they're not. I don't know if they said anything about the dividend overnight, but I got to think that dividend is in big time jeopardy here now. Stock breaking down. Is it new lows on the move? Yeah, I
Oh
think it is
yeah, oh
indeed.
yeah.
Like when stocks are making new lows, remember my saying, stocks making new lows, you gotta go. And I mean, if you're in these things and saying, yep, here it is, 5 times earnings, now all of a sudden it gives you that funny little thing because it's not 5 times, it's we can't value it now because there is no earnings. Is it going to come back to making her money again? Cyclical, so probably, they figure it out. But I think it's very, very, very concerning from an economic standpoint too, really, when you get a big warning like this. But I think it is going to be competition coming from different places. And I think the big three, I don't want to own any of them.
A couple things here before I go into the technicals on these. Something's not adding up here because they blame China. And now China is doing all this major stimulus. I guess it's more for housing. I don't know, but they're blaming China and also Aston Martin. So that, to me, there's a little bit of a conflict there. It doesn't make me want to rush out and buy Stellantis, but they're blaming China. Meanwhile, we're getting a turn in China. So are they just like kitchen sinking this, knowing that China
No
is going to pick
competition
up?
coming from China is
Yeah,
what they're blaming.
the
It's
competition. Okay, okay.
Yeah.
You're in the area of
Actually, I was reading it earlier, but my 6-second goldfish memory, I already forget it all.
okay.
But I read the whole, warning, and it was not pretty. There was a lot of scary things really said in there. Slowing demand, targeting China, profit margin forecast, obviously way down here, and talking about a cash burn situation. You never want to hear a cash burn situation. Still aiming reduced dealer inventory, just an absolute mess, and that's why the stock is punished.
Nothing good. All right, yeah, I'm just going to give you a couple monthly lows, and then you can do what you want with it. This is December of 22 low, 1371. If that was your number, well, you did see it in the pre-market. And then your November low of that same year was 1279. So there's a buck area on a $12, $13 stock. If you're looking to buy the stock, then this is kind of old news. So a lot of it may already be priced in, right? This came out last night. So you're getting new information. I just got to give my hats off to Adam Jonas. I mean, I know we talk about analysts and, being lemmings or doing things early or late. I mean, boom, he hopped on GM. I believe it was on Wednesday last week. Someone else hopped on it too with the downgrades, but
Yeah.
man, there's some serious. And Ford's taking it on the chin too. So American Autos. But Dennis, you always like to look at sympathy plays, so let's go to those.
Well, all the auto parts makers you got to think about too, because naturally everybody's talking about Stellantis, Ford, and GM, but Magna is one of the biggest auto parts makers in the world. This is not good news for them either. MGA, if you're trading it, is down 3.81% right now. Tons of auto parts makers to talk about here. Visteon, Borg Warner, GT for your tires, all going to
That
get hit
thing's
here
never
today.
done anything. Poor Ross. My buddy worked there for like 50 years,
GP.
and that's good. He retired. We call him retired Ross now.
I don't know how they're
But
not making a lot of money because I just got new trucks, new tires on my truck, and you want to know Canadian dollars, so you got to do but you want to know how much 4 tires were on my F-150? And I bought the cheap ones.
1,600
I was gonna say
Canadian
that
dollars.
too.
Yeah, you're very close. Over $1,500, and I went with the cheap ones. $1,500 for 4 tires. I mean, they are big when you're on F-150, but I did them on the minivan last year too, and it was over $1,000.
But Dennis,
I mean,
apparently you can get tires at Costco now.
Well, I should have went Costco. Next time I'm going to Costco.
Did you clean that van out yet, Dennis?
What's
Did
that?
Did you clean that van out since
my
you were
van
here?
dirty?
When you came and picked up the pinball machine?
It was dirty? My van? Dirty? No. My vehicles are nice. It's not like I have 2 kids that destroy them daily. No. My kids are very tidy.
I could have ate for 2 weeks off the food on the floor.
Well, welcome to having kids. You forget these days, Joel, where your kids are there and they just that cookie bar, bang, this bang. You're like, did you put that in the garbage? Oh, yes. No, it's on the floor. The garbage is on the floor. That's what they consider the garbage. Yeah, welcome to kids.
All right, Borg Warner, real quick. Boy, that one, 31 to 37 last week. So this will be an interesting. This is at least as of late, this has been the best in breed. So keep an eye on Borg Warner. Visteon, man, haven't looked at that in a while. That's hasn't been performing great as of late. And then what else? I guess that's it. And then I guess we could pivot from here into China.
Yeah, so we mentioned, obviously Stellantis and some of these other automakers have been talking about the competition coming from China. And while we've got that going on outside the autos, just in general, the Chinese economy here, or I should say the Chinese market, is heating up in anticipation that the Chinese economy is going to see this big turnaround backed on the stimulus measures passed by the Chinese government. We saw BABA, JD, basically all those Chinese names start heating up last week and continuing today. Alibaba is now up another $2.50.
It's unreal.
Or sorry,
I got it up over 5.
I was gonna say up $5, up to 112. So now just in the last month, Alibaba stock is up more than 30%. People are rushing in. At this point, it seems like, it's not just retail rushing in to buy China stocks here. It seems like everyone is. And we were talking in the pre-market show about maybe people are selling some other names to buy some of these China names. Either way, if you look at where the strength is today as we head into the new week, it's where the strength was last week, and that's in China. That's in these Chinese names.
We know this market likes to rotate within sectors. It rotates, defensive, non-defensive. I do believe you are seeing some rotation happening here because when you get a rally in China to the extreme that we have seen, and this is one of the biggest rallies that I have ever seen in China, FXI from 26 to 32 in 5 trading days, Alibaba from basically 85 to 112 in like 6 trading days. These are huge moves. There is big time money coming in here. That money has to come from somewhere because the money's probably not just coming from cash. Like, it's probably not all the cash people feeding that. It's got to come from somewhere. And I do believe there's going to be a little bit of like, oh, well, if China's going to be more accommodating over here, the Chinese government, to their stocks, why am I paying 38 times for NVIDIA when I can pay 10 times for BABA? I think there's some of that going on. I also think there's probably rotation within emerging markets funds as well. We did see a significant sell-off in Japan on Friday. Again, that's due to elections. There was some other stuff happening there. But I also think a little bit of Japan's weakness is China's gain as well. So don't be surprised if you start seeing a little bit of an inverse correlation between Japan and China. We've seen that for a while, where Japan's going way up, China's down. They don't care. It's all about Japan over there. Maybe it's going to be all about China going forward. Unbelievable how this has turned. I would say it's turned quickly, but it hasn't turned quickly. It's taken years to turn, but it's turned violently. And this is now an impressive move. My long-term portfolio is just absolutely loving this. I haven't sold any BABA yet, although I'm like looking at it and it's just running. I'm like, it's rocket ship mode. And I was like, I feel like lightening up. I did lighten up a little bit of Baidu on Friday because I'm like, this move is just so incredible. It's hard not to lighten up a little bit into it. I also own some emerging markets funds. Those are doing very well as well. And I mean, you go into the smaller stuff like NEO, that's up 14% here today. Here you have auto disaster day. And whatever, Stellantis loss is NEO's gain, apparently. Competition coming from China, they're citing. Well, I think about NEO, and NEO is up, 14% here this morning. So these are huge, huge moves.
Yeah, XBEV getting a move. I could do some technicals here in a second, but Ariel Penn comes in here 8:15 with a comment that tomorrow is the start of China Golden Week, and the markets are closed for 5 days. He says, what happens to the tickers during that time? Now, I remember the China Golden Week, and it come up, but the markets being closed for 5 days. Do you remember that, Dennis? I mean, that is
I
a
don't know.
long time for
Like the stock market's closed for 5 days?
yeah.
I don't remember that at all.
China, yeah, I'm not
I
sure
don't ever
about that
remember
either.
China being closed.
But
I think all the ADRs and stuff keep trading. I don't
Yeah.
know.
Oh, yeah, for sure.
Chinese
yeah, the
market.
ADRs are. Yeah. What nice timing. Everyone's gonna be like China Golden Week. The markets are up. Dennis, forget about these stocks. Why don't you just forget about them and just kind of hold BABA? I mean, right now, if you're just going on the monthlies, I mean, it's got room to 120. I'm just going to give you monthly levels on this because even the 50% retracements on these things are just such astronomical. I mean, so much. I think I figured BABA the other day, and the monthly retracement was up near 180. I'll do it in 1 second.
Well,
But
this is just the issue. Like, I look at these things and you're right. Like, you're trying to just forget about them. Like, but you're looking and saying, wow, 30% in a week, to AB's point, is a damn good return for multiple years. I mean, you're in it too, AB. I mean, I guess if your time horizon is forever or, long term, and it's hard. This is a tricky situation because all of a sudden people want your stocks and you look at valuation and you think, even, doing a current valuation on Alibaba, you think, well, it's come up 30%. So, it must be getting expanded, that PE multiple. But then you go to your trusty Benzinga Pro and you type in Alibaba and you look at the PE, and for whatever reason, that's not coming up for me, but my internet may be slow.
Like PE at 12 and then price to sales of less than 2. I mean, it's still very
ridiculously cheap.
Still very,
it's so
very
ridiculously cheap.
And I mean, even from the technicals, 30% in the last month, but you look down on the bottom right chart and it doesn't look like you've, gone too far.
It looks like you're just starting.
Yeah, exactly. I mean, I think with, there's been a lot of debate I've seen on Twitter among the investing community about China right now. There's this tweet from I don't know how to say it, but I think they're in Michigan too. The Kobayashi letter. This account?
Yeah.
This guy, I'll just pull up the tweet because I was reading it last night, but he's basically saying it's too late for stimulus in China. But kind of one of my whole thesis is when I was buying BABA, he said just days ago, China announced massive economic stimulus as their economy crashed. Yada yada. Something is seriously wrong in China, and it's too late for stimulus. And he goes on this whole thread and talks about the real estate market and all this stuff. But I always think when everyone's so bullish on China and we went through a cycle like this in 2020 or 2021, and then everyone's so bearish on China. I don't think it's ever as bad as people say it is out there. And I don't think it's ever as good as people say it is out there.
Sure.
So I think with the stimulus, it's good for the stocks in the short term, obviously, but then you have to question, well, what's going on in the overall economy that they need all these stimulus measures and everything going on. And I mean, I'm still just gonna hold my Baba position, but I'm not like I don't think it's gonna double from here to 200.
I'm not
I mean,
adding to it when it just ran 30% in a week.
yeah,
But would I
exactly.
buy more on a pullback? Maybe. Would I lighten up and try to reload? I've done that before, but then it keeps going without you. It's just like when you look at two stocks, Alibaba and Baidu. I look at those two, and those are the two that I own. Pinduoduo is, you can look at the
that
JD.
moving Pinduoduo.
They're all moving like crazy. But when you just stop and look at Alibaba, they are like an AI play, like big time. You're sitting here with a P of 10, now it's 12 or 13 because it's moved up 30%. But it's like, if we've said it before, if Alibaba was in the US, it would have been a $200 to $300 stock. And now all of a sudden, maybe people aren't as scared to invest in China, and it's a catch-up trade. And this catch-up trade is catching on hard right now. Again, I don't think I can chase, but I'm not even sure I want to sell yet. So, I mean, this has just been such an incredible move in such a short time. My trading part of me says sell, but my whole investing side of me says, are you nuts? I'm like, this is what you've been waiting for. This is, so I've got, the Herman's head thing going on where I got big time conflict here. Trader says, take the money and run. You've been beat up in China before, and now they're giving you 30% in a week. But that investing side says, man, these stocks are still dirt cheap.
And we know the way that this has been, a momentum market. I mean, and if they're starting to peel out of tech here, I mean, there could be a lot of money, a lot of rotation. It seems, looking at where would people, if they're pulling out of tech? Oh, IWM. Oh, we're up here near the high of the move. Do you want to go there, or do you want to go where there's some potential? But a lot of momentum going. I just want to say one thing. I think it's called the Kobisi letter. He is a local guy. I think he went to the same high school as Raz and my nephew. And I reached out to him and I got no response. I tried to get him on the show. So I guess he's too big time for pre-market prep.
He just didn't see your email.
Or
Nobody's too big time for Benzinga. Reach out again. We can get him on.
He might just not do video or podcast stuff, because I think I've reached out to him before too for some different Benzinga shows, and it's never worked out. But I think it's good. There's a lot of debate on Twitter or on X right now, again, in the investing community about, like, do you buy China? Do you sell China? I mean, it's interesting too, because going back to the auto thing, like right now you've had the American economic leaders. Lael Bernard was talking about it when I saw her spoke, and she's the director of the National Economic Council, saying how they're basically going to ban these Chinese EVs from flooding the U.S. market to protect the U.S. automakers. So at the same time, you have China producing all these cars and everyone worried about the competition coming. Other people are saying their economy is collapsing. And I'll be honest, I don't really understand where, like, when they say, we're banning these cars because of that China's using like unfair subsidy. Like back when like Tesla was first coming out, like the US government was subsidizing Tesla too. Did that make it unfair subsidies to sell them? Like, I guess I don't understand. Like, if I wanted to go buy a Neo for $15,000, like, why shouldn't I be allowed to? I wouldn't do that. I have my cars that I like more than the Chinese ones. But it seems like they're producing a lot of cars right now.
Because they're trying to protect the unions. I mean, this is what it's all about. Biden's over there and, obviously campaigning for the strikes. They need more money. Protect the unions. They got to get their $110 an hour. So your consumer, a lot of them are making, very close to minimum wage or just slightly above, have to pay more for their cars because we need to protect the $110 an hour jobs. That's the truth.
I'm just saying, it doesn't seem like very like free market. It's like, okay, we'll put all these policies on the Chinese names, but it's fine when we subsidize our cars when we need to. Which is, I'd rather support the American car.
I'd rather subsidize our own cars too.
Yeah.
But
either way, the China all up again today is basically what you need to know. And I think you guys bring up the good point in rotation, because if it does end up looking like the institutional investors are selling American names, are selling their mega cap tech stocks, which I've heard a lot of money managers talk about how holding Mag 7, like you can almost hold the Mag 7 as like a cash balance. Like you're looking at that as part of cash in your portfolio, that if you need to sell some Apple shares, if you need to sell some Nvidia to buy something else, you can. And I'm not saying that's what we're seeing today, but if we start seeing more and more of that, where China's going up and up and up and the Mag 7's going down and down and down, that could be a pair trade to continue to watch. And then Dennis, you brought up the Japan and China pair trade as well.
Yeah, I think that
Duo.
has not been the case, but I think it could start being the case. So keep an eye on that relationship going forward. We're like very early, like one day it happened, and again, that was due to elections, so there was a lot happening that one day. But keep an eye, because that's a potential relationship forming where we maybe start seeing an inverse relationship between Japan and China.
Just two notes here. The yen, I won't call it the carry trade. I'll call it the yen scary trade because it scared the market on that August 5th. But the yen has continued to move higher. The EWJ, you have to look at that bad day on Friday. That reflected the news ahead of time before it happened. So that's back up today. But the most impressive chart here, PIN Duo is filling its gap from an earnings play that took it down in August under $90, took it to 88.01, and now the gap fill, you are getting it today. That's at 138.14. It's currently trading at 142.02. If you want an important bar to keep an eye on today and moving forward, it's the price action from the day preceding that big drop, where you had a high of 145.28, and you sold off pretty good that day, 138.14 with a close of I'd say 140. If this is going to be another big move up here, just 140 to 150, the bulls got to show like sustained bids here above 140. We'll see if that takes place in today or over the next few sessions.
Pinduoduo also has, on the backdrop of this move right now, they are talking about, the current administration is talking about getting rid of this de minimis trade, basically that it would, for a while, Pinduoduo, which owns Temu, has been able to avoid import duties on its goods and shipments because they're all less than like $800, but they're talking about changing that. So if that does end up going into effect, and then all of a sudden everything you buy on Temu is being taxed more, that could be something to watch. But again, just all these moves in the Chinese stocks have been insane. So let's go over to some other. Let's go to CVS here, because CVS has been in the dumpster. We know, we've talked about it. Basically, it feels like every earnings report, it feels like CVS is just dying. But someone out there is at least seeing some potential value in here.
A lifeline.
Yeah, you have an activist investor talking to CVS. This is Glenview Capital. Glenview Capital eyes turnaround for CVS Health amid financial strain. So shares are trading higher following reports suggesting that hedge fund investor Glenview Capital Management is meeting with company executives to push for ways to improve operations. So I don't know, again, the details about what they think they can change with CVS, but the stock is up $2.37, 4%. Or sorry, that was the move on Friday. Today it's up $2.12, 3.5% this morning, up above $60. Could this be it for CVS? Is this what investors have been waiting for?
I don't know if it's what they've been waiting for, but they need something. I mean, one thing to say is we had three for years. We always had the three. It was Rite Aid, CVS, and Walgreens. And we know Rite Aid went away. I believe Walgreens is eventually going to have, I think the ratings on the wall here, that they've got problems. 11% dividends, not sustainable. The stock's at $9, was at 80 at one point in time. Problems, a lot more problems at Walgreens. CVS, maybe this is like they're thinking. Obviously, they got the whole Medicare stuff, that they've done. So they're trying different things because the core business is completely under attack. Maybe this is potential for the turnaround. If I was going to bet on any of them, and I'm not, but if I was, it would be CVS. It wouldn't be Walgreens. So I think probably the activist looks at Walgreens and says, that's too tough. But maybe, just maybe, we can turn CVS around. So I think the target is correct. I'm not, it's going to get a pop, but I just think the core business is under attack here.
It's a big pop. You're getting into I can't remember if this was earnings or it was like government news, but you're getting to an important area, the highest it's been since May. So we'll be keeping our head on a swivel here, 63.92. That was your July 30th high. And then there's a gap filled nearly up to $67 here. There was a big move on Friday on this. I don't know if someone got the memo ahead of time. So you just have to see, are people willing to, just scalp it here that maybe bought it on Friday and, just taking the quick few bucks and running. But keep an eye on this high from late July, 63.92. Then you get into the gap area. Long consolidation too, right? Since you came down in May, you just kind of zigged and you kind of zagged, and now you got a catalyst. Walgreens under $10, unbelievable. That's up a dime on this. No one really cares. What? That's it. It's Walgreens and CVS, right? Rite Aid's gone. The internet's real like Amazon. What Amazon's supposed to put? And like, wasn't Amazon, J.P. Morgan, and like Warren Buffett? Weren't they going to do, or Mark Cuban or something? Weren't they going to do like an online pharmacy? I just think that's one thing that I don't know if CVS has is better, but you got to go in there and pick up your drugs. It's just people just aren't buying all the candy and makeup and all the other
I don't know
stuff.
if you need to go pick up your drugs there anymore. That's the problem. It gets delivered. I mean, you can go different places. It's just competition here anymore. It's
Yeah.
not like it used to be. So that's an issue. And again, businesses that don't, that just stay the same, and just, well, we just continue. This is what works. This is what's always worked. This is what we're going to do. Businesses that don't innovate eventually run the course of time and don't survive. You always have to be innovating, like doing what you need to do to keep your customers happy, listening to your consumers, offering different services. I mean, this is a problem with, so many businesses that we've seen over the course of years, and you think about Sears and you think about the J.C. Penney's and you think about Rite Aids and you think about Walgreens. And, wow, is Walgreens different than Rite Aid? It's really not. CVS trying different things, but it's tough business, man. Innovate or die.
Yeah, I've never used the Mark Cuban drug website. I'm on it right now. It's called costplusdrugs.com. I don't know. I assume you have to go through like your insurance still and whatnot, but it does look pretty, like they have all the prices on here for what it would cost you if you went and bought it at its retail listing versus what you could buy on this website. So if anyone in the chat has used that Mark Cuban site, let us know, because yeah, I mean, it looks pretty good from what I can see, but yeah, I don't know.
Is this GDRX? Is this this is like a company, right? Online pharmacy delivery.
Yeah.
Hmm.
But that's tough too. So you can't just go all online. It doesn't seem like either. Dude, people just don't need drugs anymore. We're all going to be healthy. They're all going on Ozempic, one drug, and then that gives you have to need any other drugs because you're skinny and you're healthy and you get rid of your diabetes and everything. Is that what's happening here? No.
Yeah.
No, probably not.
You do, yeah. I mean, it seems like every week, though, there's a new headline about Ozempic is good for this, or Ozempic, data for Ozempic shows that it's solving diabetes, and then this, and then that. So, I mean,
weight loss solves diabetes, so it definitely probably helps there. But
yeah,
everybody's talking the Amazon. Like, I've never ordered my drugs on Amazon, but everybody says it's good and cheap. And I mean, here's Amazon coming in, and I think there's a pretty good case to say that Amazon, has done a number on the pharmacy.
Can you get your drugs at Costco?
Probably.
Yeah, they do.
Yes,
they
you
do.
can. Yep.
Because I remember as a kid,
you get them everywhere now. That's the biggest problem.
I remember as a kid when I was like 13, 14, I had really bad acne and I got prescribed on Accutane, and it was like pretty expensive. And then we went to Sam's Club pharmacy, and it was like you got like the bulk supply, like 6 months of it for the price of like 1 month at our other pharmacy. And so, yeah, I mean, I figured that if Sam's Club has a pharmacy, that I figured Costco did as well. So, Lots of people in the chat sharing where they get their drugs from. All right, I see our guest just popped in the background. Good timing there before we got on
this is going on a bad tangent.
On a bad tangent there. We're talking about where we buy our drugs from, Tim.
Yeah,
all right, Tim Quast hanging out in the chat.
Well, ask him where he gets his drugs.
Yeah, well,
some guy on the Snow Hill.
Yeah, well, he's in Colorado, so there's a lot of places you can.
Guy on the Snow Hill.
All right, Tim Quast, Market Structure Edge, of course. Let's go ahead and bring Mr. I've got a special little bumper here for Tim, so let's give Tim his special little intro. Mr. Tim Quast, welcome back to PreMarket Prep. How are you doing this morning?
AB, I'm well, thank you. So I was just outside the door in the alley picking up my drugs.
Okay, that's your. It's nice.
He's ready to rock.
Conveniently located out the back door.
It's nice your pharmacy is that close to you that it's right in the back alley. That's convenient. How are things? It looks very dark out in Colorado right now. Are you in Colorado?
Yeah, you know that you can really tell that the days have shortened because I can see. I don't know, is it a waxing or waning moon that we're under? So that I can see it right out the window, right over Mount Werner at the moment here in Steamboat Springs, Colorado.
That's important because there are some people out there that think that whatever the cycle the moon is in is important for the Lions game. I don't know if you've heard that theory, that the Lions have like never lost with a waning gibbous or something like that.
Really? I'd need to see the data. That could be a false.
You're a you're a data guy. You need to see the data. Speaking of data, what are we seeing right now in terms of just supply and demand in the overall market? Some certain sectors and industries I want to ask about for sure. But before we get into that, just kind of like from a top level view, what are you seeing right now?
Well, so the last 2 months, and two is a pattern, but not a trend. We say one is a coincidence, 2 is the pattern, 3 is a trend. I mean, if you're looking at short-term data. So here's what I'm thinking about, AB, is that we're about to transition. It's the end of the quarter. It's the end of the month. These are very important things, points in time for traders to be aware of. As I say all the time, the market is not, just a continuum that starts over at 0 every day and we trade it. That tends to happen to us if we're short-term traders. But it has a cadence and a calendar. So if you look at what happened in August and September, it was a distinct change in what has long been the trend in the US equity market. We like to say that there is a new month, new money. So that you and I who are look, we run payroll and process those things in my businesses, and people make contributions to their retirement plans, and we match those, and all that money gets deployed, and those things tend to hit disproportionately at the beginnings of months. So really, since the pandemic, you could count almost in metronome fashion on a new month being pretty good. And then we had August. It was the first time where we went, wow, that was not, you can back up to July, and July was good. New month, new money. August, September, in fact, that was the last time I was on, right? I think Joel and I traded a couple of notes about this. I said, I think the last thing I said on Benzinga PreMarket Prep at the transition into September was, I'm short. That's what I said. And I had to travel, but that was a 7% return
really got hit.
Because I used some leverage. And so that's what I'm thinking about. Was it a pattern or a trend? Is October going, and it's a new quarter. It's the last quarter. It's the last month ahead of a U.S., a contentious, portentous U.S. election. I don't know, but certainly I look at that, and then I'm going to look at the surrounding data. And I think this is very important for traders to do. The best thing you can do is beware of the big picture. And as traders, we tend to get caught up in the weeds and the grass, and we're not looking around at what may be developing. So, AB, I can tell you what the data indicate.
Yeah, please.
Okay. So, let me show you what I look at.
Yeah, you can pull up your screen for Market Structure Edge as well. I want to see the supply and the demand.
Okay, I mean, this is the stuff I think about all the time, and you can do it too. At Interactive Brokers, you can go to what's called the Discover section and find MarketStructureEdge and these daily trading ideas. You can do it this way. But here's what I look at. Right at the top of the screen is this thing we call broad market sentiment, and I wrote about this to Edge users today. If there's a horse and a cart in the market, which is the horse and which is the cart? Because you don't want to put the cart ahead of the horse. And the horse is the engine. And the engine of the market is, frankly, BlackRock, Vanguard, State Street, Fidelity, Geode Capital, UBS, Credit Suisse, JP Morgan, Morgan Stanley. You look at those guys, they're $45 trillion of assets under management. And how they deploy that money is a big deal. So that will manifest in broad market sentiment. And it's a 7. So if I tally the data from January, whatever the first trading day of 2021 was, call it January 3rd, all the way to present, that's almost 940 trading days. And only 10% of the time has the market over that span been at broad market sentiment of 7 or higher. And if you add it all up, what are the market returns for that 10% of the time? -4%. So I look at that data and say, well, all the probability is that the market declines. Because if I back up to the last time here in end of August, where broad market sentiment was at that level, what happened? Well, the market declined. I back up to the time before that, July, right? Basically, right after options expirations in July, broad market sentiment was 7.3. What happened to the market? It plunged. Now, again, I'm not saying that's going to happen. There's a pattern. I don't know if it's trend, but I look at that. And I look at the supply side. So this is short volume, not short interest. It's the Reg SHO Rule 201 data set. Only been around since 2011. It's a very contemporary data set. And what has lifted the market since it bottomed, now notice this, that here's where the market bottomed, right about 6th, 7th of September, and supply was very high. You have falling demand, high supply, then they reverse. In fact, this was the Fed effect. Demand hadn't even bottomed, and the market took off because people bought derivatives. Derivatives are implied rights to buy or sell. They may not be an obligation, right? But the market took off from there, and supply came down, and it took a big dip on Friday. Now, if that is all, but here's the question. If the market is at 7 and it got its last little gas from covering, what happens next? I don't know, but I'll tell you what I probably do. I'm looking to short it again. That doesn't mean I'm going to do that, and I'm very careful, traders. I don't just go out there and push a bunch of money in on red 34. I push half of it in on red 34 and half of it on the opposite trade, and then I have a 50 basis point range in which I will wait to see which way it's going to go, and then I'll pull one. But I'm not risking losses. There was a great article in the Wall Street Journal about Millennium, hedge fund, one of the earliest consumer of our data, the pod at Millennium. And they don't take any chances. They don't take risks, but they produce enormous returns by doing that. So you have to take a lesson from Millennium. Don't risk big losses. But you look at the data, you stack the probabilities in your favor. And if you looked at this, you'd say, well, there's a high probability that the early October may not be great.
Tim, I've made this argument just when we started the show that maybe, just maybe, China's gain could be U.S. market losses, where the money's got to come from somewhere. Right. I'd love to see what MarketStructureEdge looks like for China. Do you cover like Baba, Baidu?
Yeah, let's we can put it. I don't have a China portfolio.
That's okay though. Let's go to Baba. That'll do it probably.
Okay. This is China, right? So let's see
what this looks like.
And as you would expect, so what this data tells you is at options expirations in September, whoever behind the scenes knows more than all of us about, maybe not you, Dennis, about what the Chinese government is going to do, had already made their bets. because this is kind of, there's a dip here. So supply is only 40%. Contrast that with the S&P 500, 48%, and it's been at 50. So people made long bets right there, and now it's 10. Supply has risen well up into the 60s, but that is filling buy orders. There is a shoe that drops. There isn't enough supply in the market to meet what the money needs, and so market makers create stock. They're exempt under Reg NMS from having to locate shares to short because they maintain an automated market so that the prices flow freely and you can trade any place. If you got a marketable trade, it's going to get filled if it's 100 shares. 1,000 shares, different deal. But that is going to have a consequence ahead. Where is it? But as you would expect, Dennis, huge surge in demand. How sustainable is it? I don't know.
That's the question.
You know,
it's hard. So things can stay at 10 a long time, though. Sometimes
they can. Oh, absolutely. Nvidia could go a month and a half at 10. It's not doing it now. It's not doing it now. But
what about Baidu? Does it look the same? BIDU?
Let's have a look.
I'm picking on my stocks, but
yes, you should. You know, you would expect it's very similar. Yeah, look at that. I mean, Baidu's even bigger. Massive covering of shorts right into September options expirations. 18th, 19th, 20th were all options expirations dates. Then what would that be? 23rd, new options traded. Everybody squared the books on the 24th. So look at this massive surge in demand that preceded the move in price. That's why it's helpful to you traders. What you want is something that will tell you what's coming. And so if you have a massive, this is what we call a divergence, rising demand, falling supply, they're moving inversely to each other. And that's what causes the big surge in price.
Right.
Well, you can use that all the time to your advantage and then take the gains. I mean, if I'm looking at this, is it over? No, it's not over. But if I were trading this, I'd be looking at what happens into October expirations. Could be the end of it. I don't know. You know, we'll find out. It depends on how much belief people have in the capacity of a devalued currency to restore prosperity. And I'm telling you, it is zero. But we do it all over the planet, and you could take advantage of that and trade risk assets profitably because of it.
One more, Pinduoduo. Because Joel's on mute, so he lost his privilege to speak.
Oh, no. Okay, what's the ticker? Remind me. PDD. Yeah.
PDD.
Yeah. I don't look at these very often.
They
but
probably all look the same, but it's just cool to see because these are these are huge. Like when you look at it, you don't see a lot of stocks that look like this, right, Tim? Like
you don't. No, to have this kind of, again, if you look at the trend, it's less pronounced around September options expirations, which would tell you people use less leverage, less derivatives in PDD than they did in Baidu. And that may be a product of not being able to get Baidu. If I can't get it, then I'm going to go look for some other alternative. Can I get a swap? Can I get some other contract for difference? Can I get a basket of derivatives that are roughly similar to the equity? But once again, you see surging demand, falling supply. That's what delivers gains. The moment that breaks down, is that breaking down? Well, it's still well below 50%. But and is this just a surge to satisfy buying? The problem with that is, you know, that within the next month, that has to be offset. And it usually gets offset within about 10 trading days. That's what we see in the data over and over and over. That if you're Citadel, and all of a sudden there's a whole bunch of people who come to buy the stock and you fill the trades for it, now on your ledger, you are short PDD. Well, what am I going to do? I've got, from a regulatory standpoint, T plus 35 days to square the books. But I don't want to pack that around. Citadel doesn't want any exposure, right? So in the next 5 days, it's going to try to get square one way or the other. Do I offset it with a long position somewhere else, or can I cover my exposure? And that all happens with machines in 220 global markets. So I don't know, but I would say that's a major surge. I would look at it and say, I'm not sure I trust the sustainability of it. And you say, well, why? Well, it's too dependent on the absence of supply, not the presence of demand. And those things tend to falter all of a sudden. And I think today, China didn't have a great day.
Okay, one more from Rob Hood. Rob Hood in the chat, and he wants Tesla. So it wasn't me asking, it was Rob Hood. I want to see Tesla too, though.
Okay.
And then we'll let
Tesla.
Why don't you just call Tim later, Dennis?
Rob Hood, I'm asking for Rob.
Oh yeah,
Rob
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 Hood.
has been
Yeah,
with us since the beginning.
5 minute.
Well, we
Yeah.
have to then. And here too, Rob, I would look at this and say, well, I mean, it's been awesome. Anytime a stock, you see demand, trade supply and demand, not price. Price is capricious. Price is set by Citadel, and Citadel will fool you. They're better, right? But demand, you can't hide. And so demand popped above 5 right at the beginning of September, and it's been there the whole time. And notice that the prices performed very well. So you know that that's good. But coming to the end of the month and the quarter, I look at that and say, I think all the traders are shifting short. I would take my gains. Look, it might carry for a little bit, but who cares? If you give back everything that you got because you keep hanging around, what's the point? Just be happy and take your gains. I look at this, when you have a surge in supply like this at the end of a long run, not at its beginning. If it happens at the beginning, market makers are creating stock to fill trades. It's what they do. It's their job. The SEC wants them doing that. All right. If you're going to be at the bid and the offer at the market, you got to do that. But this, to me, that's the end of a run, because what's happening today, month-end options are expiring. Context matters. I would take my gains.
All right, Tim. What else are you looking at here? We're going into the end of the quarter. On Friday, it kind of felt a little after hours, a little selling pressure, locking in some profits. Also, I don't know if your indicator can adjust for seasonal patterns, but we are coming up on a very important seasonal pattern. Do you know what that is?
Tell me.
Sell Rosh Hashanah, buy Yom Kippur. Rosh Hashanah starts on Wednesday. Starts on Wednesday. And my article will be out over the next couple of days. But do you talk about, is there still some stuff to buy out there? And if there's going to be weakness in the market, where do you think it's going to be?
Yeah, well, that's a good one. As a long backstory, I know a lot about Rosh Hashanah and Yom Kippur because of how I grew up. And I didn't grow up Jewish. I grew up Messianic Jewish. Though that's a rabbit hole. But I do. That's it's an interesting thesis. So here's what I would say. Again, I'll say if the horse is the broad market, it's at 7. And historically, that produces declines. So generally, I'm going to look to short the market, and I don't do it very often. These opportunities come around like 4 or 5 times a year, really, where you could look at the market and say, maybe I can get 5 or 10% to the short side. And I'm not saying that's going to happen, but certainly I think about that. Number 2, think about the concentration of the market. Look at this portfolio called mega caps. This simply screens for all the stocks in the U.S. national market system with 100 billion or more of market cap. And there are 120 companies in it. And if you take the market cap of these 120 companies, they're 79% of U.S. market cap in 120 things. And they have volatility of 1.8% on average. Why? None of that stuff is coincidental. BlackRock et al. The big passives need large liquid securities that have less than 2% variance versus a benchmark. And so all the money is concentrated in that. And look what the supply side has done. It plunged on Friday. So I look at that and say, all the money is looking for safety. That's where the money is. If you look at low volatility, there are 35 in it. There are 25 in momentum. That's 60 components. It's a staggering number in momentum and low volatility. There's a lot of divergence in the market. That's the good news. I would say the concentration is that big money is concerned about volatility. So that will manifest in a lot of low volatility choices because all the money will try to be in those. Now, if they're right, we're good. And if they're wrong, we're not. And the market's going to get clocked. And I don't know which one it is, Joel. So, what do you do? Well, as I said, I'm going to look to see if in the next few days there's an opportunity to make money to the short side. And then is it just a short-term thing? I don't know the answer to that. I just look at the data every day.
All right, Tim. Well, it's always great to catch up with you, learn about what's going on in the world of supply and demand in the markets. Again, Tim Quast from MarketStructureEdge joining us here on Benzinga's Pre-Market Prep this morning. Enjoy the rest of your Monday. Any final words you want to leave us with, Tim?
I'm heading out on bikes today, and the color out here, don't tell anyone, but it is just absolutely spectacular. And maybe it is where you are, Dennis. I mean, we are awash in golds and reds
Just starting
and
here.
yellows. It is just, it is
Oh.
breathtaking. So
All
that's
right,
that's what we're gonna do.
The Rockies are beautiful. We won't
Yes.
tell anyone. That's
Don't tell
That's
anyone.
a secret that no one
Right.
knows. Is that it's beautiful out there in the Rockies.
Be careful out there, Tim.
Yeah.
Will do, guys.
Are you
Good to
doing
see you. Thank you.
downhill mountain biking? Is that what you do?
I'm a gravel rider. So,
Okay.
yep, a lot of gravel. Yeah. So
There you go.
we have hundreds of miles of gravel roads in Steamboat Springs, and they're beautiful this time of year.
Awesome. All right, Tim. Well,
All right.
we'll dial
Thanks,
your
bud.
line soon. We'll
Enjoy.
catch up soon.
Okay.
And take care.
You too. Good to see you guys. Thank you.
All right. Always a lot of information when we get Mr. Quast on from MarketStructureEdge. He brought us to, oh, wow. We only have about 3 or 4 minutes left. Let's go real quick to let's do some ratings, Joel. Which one do you want to start with?
JP Morgan.
All right. Let's go to JP Morgan. JP Morgan got a
downgrade from Morgan Stanley, I believe.
Ooh, a little bank on bank crime here.
Yeah, and it's getting hit pretty hard here in the free market. They are citing higher or lower interest rates being bad for JP Morgan. I guess, everybody was comfortable over the JP Morgan, and we think of lower interest rates for the regionals being a good thing. For JP Morgan, it sounds like it's a bad thing, at least according to Morgan Stanley here. And stock obviously taking a pretty good licking here this morning. JP Morgan typically moves a buck or two a day, so when you're down 275 in the morning, the market's listening to this analyst downgrade.
Yeah, and that's I'm not too happy with this one because I did pick it up over last April, and it's been a great return. Never recovered from this red bar day. Like I just they're different. Obviously, Goldman Sachs is a different stock a little bit, but never recovered, and just a much lower high here in JP Morgan. So I'm a little bit worried about this one long term. Just the rebound wasn't nearly half of the move. The only area I'd say right now, the Bulls got to make a stand here at 207 today. He had 3 lows right in that quadrant. So see what happens at 207 if it gets to that area. As Dennis said, it's over the expected move, so maybe a little bit too much, too fast today, but not a good looking long term chart. And we've been talking. I don't think Warren did anything more in BAC, but boy, oh boy,
I think he did
he's been
sell
steady.
more.
He did some more.
Yeah, I think so. I'm going from my memory from Friday, but I feel like we had another headline on Friday that he sold more. So he's just keeps lightening up every time it gets up there. I mean, Warren is dumping Bank of America. So you've got the wall. I honestly think Bank of America is a short, no position on it. But I think every time it gets up over 40, I think it's a sell because I think you're into this Warren Buffett wall. And how many shares? He still has so many shares.
I know.
I mean, he could be sitting up there perched for months, to try to get out of that. Like when you got a wall of a seller up there, why buy it?
Yeah, I guess maybe you could explain it to where like the regionals have been, have been dogs for so long that that money now in this industry is flowing toward the smaller banks and out of the bigger ones. I think for JP Morgan, the lower interest rates, that could make sense because JP Morgan makes more of its money than a lot of other big banks on investment deals. And well, actually, no, because you would think that lower interest rates would lead to more investment banking deals being done. I don't really know.
I didn't read the note, but I think they're citing the lower interest rates. I mean, it goes either way, right? At a certain point in time, there's a tipping point, like with the regionals. You think, oh yeah, higher interest rates can be good, but then when they're locked in it depends how they're
right. It's good. It's right? Good, but then it
depends on how the book's structured.
Yeah. Joel, you pulled up Carnival. We got
they're due to report. They usually do it right when we get off the show.
9:15 usually.
Yeah, so watch out. I mean, just short term here. There's been a wall at 19. If they blow through that, keep an eye on it, especially if it comes back down through it. And the low from last week was 18, but usually moves pretty good off its earnings.
It's going to be a light earnings week. We do have Nike on Tuesday, which is going to be a highlight. We also have Levi's on Wednesday. ST Zebra, Constellation Brands on Thursday, and then we do have Tesla deliveries tomorrow. So Tesla deliveries coming as well. That's Q3 deliveries, so that's going to be a big number for them as well.
We did talk with Ryan Craver from Commerce Canal last week about both Nike and Levi's. So if you're interested in those, you can go back and watch that segment with Ryan. Other running up on 9 a.m. here, got to wrap the show up, but some other big headline we did not get to. DirecTV and Dish.
Oh yeah.
Combining. So DirecTV, which is owned by AT&T, ticker T, agreed to buy EchoStar's satellite television business. That includes Dish. And if you would have asked me, 10 years ago, I would have said this deal will never go through in terms of antitrust stuff with Dish and DirecTV combining. But now that you have all these streamers and Netflix and all this, and they're doing live TV, I'm sure DirecTV and Dish can argue to those.
They antitrust this. It's just at the point of absolute ridiculousness. This is a merger for survival for those.
That's what I'm saying. Is they're gonna go to them.
Dish, like who's this is literally a merger of survival for those parts of the businesses. I'm not saying AT&T survival. I'm saying DirecTV, Dish. I mean, it would be absolute. It wouldn't surprise me because they just seem to knock every deal, but it would be absolutely ridiculous if they threw antitrust.
Well, that was my point. Was that 10 years ago there would be a legitimate antitrust argument? The two largest satellite providers combining. Now they would have to say, like, look, if we want to survive, if we want to have Dish and DirecTV, we need to do this. We can compete with these other guys. So we'll see what happens there, but not too much implications there in terms of. AT&T's up a little bit, and is EchoStar's publicly traded?
SATS.
Yeah, so that's getting that's not even up that much. That's up.
Well, it's been rumored. It's been popping up though.
It's had a nice. For some reason,
29.
This TSG seems to be the winner. No matter TS, I had it before. TS something is involved in this. It's
TPG.
TPG, yeah. For some reason, this seems to be the winner out of all this. Down 75 cents today. So we'll see. Trying to get rid of some of that debt.
Well, 9:02 a.m. That'll be a wrap for us today. And like you said, Dennis, we've got some exciting things coming this week in terms of a few earnings reports, Tesla deliveries, in terms of economic data, not too much, although Friday we'll get some labor data that should be market moving there. So other than that, or go ahead, Dennis.
Also remember, it's the end of the quarter tonight, so we know we get some violent moves sometimes on the close. So just have your order out there. Sometimes you get taken out at a really good price. Sometimes you can get in at a really good price. You're looking to get into something. I always provide liquidity, meaning I got bids and offers out there into the close, and sometimes you get some really good fills.
All right, guys, that'll be a wrap on pre-market prep with us today. We do have live trading starting up right after this, so make sure to stay tuned. Of course, tomorrow is a T3 Tuesday, so make sure to come back for that. We always get some great guests from T3. I don't know I feel like we're due for a Red Dog. That's going to be my guess, is that it's going to be Red Dog. I have no clue, so you'll have to come back tomorrow and figure it out. But it feels like it's been a few weeks since we've had Mr. Scott on the show. Other than that, guys, that'll be a wrap. Smash the like if you haven't already, and we'll see y'all tomorrow morning.